to the GCA Summer Forum. Just a reminder that we are recording this forum and it will be posted to our GCA YouTube channel later today. All right, so again, thank you so much for taking the time out of your very busy day to join us for this forum. If everyone could please check to make sure they are muted, that would be greatly appreciated. This helps reduce the background noise during our presentation. Please ask us questions using the chat feature in Zoom. We will make sure to pause periodically to answer them. And this meeting is for you, so we really want you to be engaged. So please don't be shy. So here is our agenda for today. First, we will start with a very special guest star, Matt Gardner, who is the Assistant Director of the Post-Award Fiscal Compliance Office, who will talk to you today about audits. Next, I will briefly go over some quick GCA announcements, and then I will go into an overview of the letter of credit process. Then Michelle will walk you through Carryover. Susan will provide some tips and tricks on org code changes, requesting sub-budgets, and updating campus contacts in Grant Tracker. John will discuss department-submitted invoices, and Patrick will talk about encumbrances and open balances. Now I turn it over to Matt.
Thanks, Azalea. Good morning, everybody. Matt Gardner with Post-Award Fiscal Compliance, and I'm going to take 10 minutes to tell you everything you need to know about audits for the rest of your life. Now, I'm going to give a high-level overview on some key things we want to think about in terms of audits, how audits work, as well as some information at the end on where you can get additional resources, as well as I'm going to plug my core audit class that I teach 3 times a year. So next slide, please. First thing talk about in terms of audits or audit types. And I think a lot of misconceptions where we only think about audits as just a sponsor coming to audit their group of awards, which we see a lot of. National Science Foundation, NIH, ONR will do sponsor agency specific audits. They can audit a specific award or all of their awards. We have the federal government single audit, which is conducted every single year. We have audits from the state of Washington, since we're a state agency, as well as the University of Washington, our own internal audit. So we want to keep in mind there are many different types of audits other than just award specific or sponsor specific, which means there's a lot of different types of things that can be looked at under one of those audits. Next slide, please. So what do audits examine? Well, pretty much anything that the auditor wants to within the terms and conditions of your award, but specifically we see most frequently auditors are going to look at award expenditure compliance with the cost principles. Are the things we're charging to our awards allowable, allocable, reasonable, and consistently treated? Compliance with award terms and conditions, and that goes without saying that obviously an auditor can look at everything on our award and whether or not we're complying with any of those terms and conditions. If you have awards with very special or specific terms and conditions. So for example, National Science Foundation, most of their awards have very similar terms and conditions, standard ones that we know of through the PAPPG, but there are subsets of awards that have very restrictive or special terms and conditions. If you have awards like that that are kind of out of the norm, it should be expected that when auditors come, they're going to want to look at those special awards because there's higher risk for many of those. So terms and conditions compliance, as well as compliance with university policies. So it's not just the sponsor policies, it's that we as an institution are following our own rules with how we manage sponsored awards. That can be equipment inventory, faculty effort certification and GCCRs, budget reconciliations, approvals and delegations, and really this big concept of internal controls, which is a catch-all phrase that auditors love to use and have the basis for a finding. Next slide, please. Audits internal controls. Oh, and I did this as a, sorry, Azalea, I put this as a transition. So you can transition all 3 of these. I think there's 3. Yeah, I was supposed to get rid of that. There we go. That's good. Internal controls. Some audit findings come out as a lack of internal controls, which means the auditors believe there is not processes to ensure that mistakes or errors are occurring. Auditors are going to recommend steps that should be taken to strengthen those internal controls, and then they're going to follow up to make sure those issues are resolved. So really that translation is you squeak by this time, but we want to see steps taken to resolve that. The thing with internal controls to keep in mind is the auditors aren't necessarily looking at whether or not the cost is allowable or within the terms and conditions. It's whether or not the university is following our process for managing the awards, right? If we're not doing that and they see lots of errors, it could be that the costs were actually allowable and benefit the award, but our internal controls are not sufficient. And so that is a key area we have to look at and make sure we have adequate support there. Next slide, please. What do auditors focus on? We like to talk about the high-risk expenditures of travel, food, equipment purchased in the last 90 days of the award. Those are the big three. Federal auditors, especially NSF, ONR, NIH, hammer on those. They look at that every time they examine our awards. Cost transfers, big ones that auditors love to look at. Cost transfers onto awards, off of the awards, cost transfers that occur more than 120 days after posting. And what those three really get at is internal controls, right? If we have tons and tons of cost transfers at the end of the award, auditors going to ask, why is that? What's going on that we didn't have these costs properly allocated? Cost transfers off an award. Why are we mischarging federal sponsors, right? We draw funds every month. So if we're charging an award for cost and then 6 months later taking it off, federal government paid for that. It's kind of an interest-free loan, maybe not interest-free. We do have to pay back interest if we overdraw. And then finally, cost transfers that take over 4 months to correct, right? Where's the internal control about budget reconciliation? So all these things auditors love to look at, and this is where they find 90% of their audit findings. Next slide, please. Sponsor audits, they at their discretion can audit any single award, a group of award, or all funding from the sponsor for a specified time frame. NSF was here several years ago and looked at all of their awards for 3 years. NSF was also here just about 3 months ago to look at one specific award here at the University of Washington. That was it. It was a site visit, not considered a full-blown audit. And that site visit, basically, they wanted to look at all of our policies and procedures and make sure we had adequate policies in place to ensure that this award and the specific award they looked at was a large award with a lot of different terms and conditions and a lot of things going on. Did the University of Washington have adequate internal controls to make sure we're managing those funds properly? So a lot of different ways your sponsor can audit you. Some sponsors regularly audit all of their awards like NSF. Some only target certain aspects. ONR is here again. They're doing another equipment audit. They did one several years ago. ONR loves to come out and make sure that we as an institution are maintaining and documenting any government-owned equipment properly within our system. Big equipment audit from the Office of Naval Research. Next slide, please. Internal audit. UW internal audit serves a couple of main functions. Number one, acting as a liaison between external auditors and UW units. If you're ever contacted by an external auditor sponsor that they want to audit an award, you want to forward that to internal audit. They are our liaison between the department's central offices and the auditor. They're the experts for talking to auditors. Internal audit also provides focused internal audits and investigations, which are good. And audits from internal audit are a good thing. You'd rather have internal audit look at your award, look at your internal controls, and discover issues that can be corrected before sponsors come out, right? There's an opportunity there to make changes and to improve. So internal audit is actually a really good thing. They keep us out of trouble and can identify issues that may cause problems down the road. Next slide. And then the final one I want to mention is the federal single audit. And most people don't even know when that's going on here at the UW. So the federal single audit, since the UW is part of Washington State, the federal government requires an annual audit for any entity that receives more than $750,000 in federal funding. Washington State receives a lot more than $750,000 in federal funding. UW is part of that, so we are part of the single audit. the single audit is not just UW, it's all of the state of Washington. That audit report is publicly available, and you'll hear it most frequently. You'll hear this come up if we are a subrecipient, and sometimes the sponsor will want us to provide a copy of that single audit to them. We can do that. There's a link there on the slide for more information on accessing that. You can also Google State of Washington single audit and find a web page that'll bring you to all those. But this is what most people think of as a single audit. Is I have a sponsor that says they want a copy of our single audit. This is what the sponsor is referring to, is that federal single audit that occurs annually. Next slide, please. And finally, why do we care about any of this? Well, there's a lot of consequences that come out of audit findings. You can have cost disallowance. Departments are responsible for covering disallowed costs. So if a sponsor finds that the travel or food costs are unreasonable, there's no slush fund of university funds to pay for that. That has to come out of departmental funds to pay for disallowed costs. Reputation, that's a big one, right? The University of Washington is going to be on the front page of the Times if we have a major audit finding. PI, school or college, and department. And what can that do? That can lead to sponsor restrictions going forward. Sponsors have a right to limit or restrict current or future funding based on audit results. We have some federal sponsors right now that will do that. If we don't comply with the terms and conditions, they will limit access to funds. They will put restrictions on funding in the future, add more terms and conditions, more reports that we have to file, right, to make sure we're managing those funds properly. And lastly, audit findings lead to more audits. It's like getting your tax return audited. If the IRS finds stuff, they're going to come back every year and audit you. Same way on this. I used to work in tax accounting, so IRS coming back after they found something was quite frequent. Next slide, please. Any questions? We have lots of resources out there on the PAFC webpage on spending, specific cost items, audit information. I also teach an hour-and-a-half class on preparing for audit through CORE. That class looks at a lot of these issues. It looks at examples, and it's about preparing for audit when you start your budget, start working on your award, not when we find out we're going to get audited. It's about what can we do while managing our award to be in a better position when audits roll around. And finally, internal audit also has a webpage with some good information on the audit process, as well as their audit plans, their annual audit plans here at the UW. And that's all I have. I have to run off to another meeting that I've got scheduled. But if anybody has any questions on any of this, my contact information is at the start. Feel free to reach out at any time. Always happy to discuss this or any other post-award fiscal compliance topics.
Thanks, Matt.
Thank you.
All right. Now I'm going to go over some brief GCA announcements. All right, training grants. So a training grant is a grant that helps support research training for a given number of students and or postdocs in a particular area of study. Many of our training grants expire in June, so we sometimes call this time of year training grant season. For those of you who manage a training grant, you should be receiving or have already received a grant tracker inquiry from our reporting team. Some of the most common messages you will receive include the following: stipend corrections or unallowable charges, request to review your outstanding trainee obligation schedule, which also includes the tuition, and deficit balances. So please help us submit your financial report on time by doing the following: correcting stipends in a timely manner, quickly removing unallowable expenditures from the budget, confirming and completing your outstanding trainee obligation schedule, and providing a budget number for your deficit transfers to help facilitate the closeout process. And before I go to the next slide, I see something in the chat. Oh, okay, Savina, that's nice. Cool. Okay. So I just want to make sure I didn't miss anything. Okay, so my next announcement is about researchers. Do you have a researcher in your department who's doing amazing work and loves to share their work with others? If you do, GCA would love to hear from you. Each quarter, GCA would like to invite a PI from your department to give a 30 to 45-minute Zoom presentation to our staff. These presentations help us connect to the fantastic work that is being done here at the UW. So I'll be sending out a survey later today or tomorrow, and I'm going to add a comment section in case you would like to let us know if one of your researchers would like to present for us, or you can email us at any time at GCA Help with your suggestions. And then before I move on, were there any questions about either the training grants or the researchers?
Nothing in the chat.
Thank you, Susan. All right, so I'm going to move forward into letter of credit. Some of you may be familiar with letter of credit from either a finance or business standpoint, but when it comes to sponsored awards, it's slightly different. So what is letter of credit in relation to sponsored awards? Most federal agencies use letter of credit, or LOC for short, as the mechanism for providing cash disbursements to award recipients. For federal sponsored awards, payment is requested and received on a cost reimbursable basis using an online system. There's no physical bill or invoice involved. So how do you know if your award is letter of credit? So there's two ways you can check. You can review your funding action notification, or you can go to Grant Tracker and look for the words payment type or form of payment. So on this slide, I have an example of both. On the left-hand side is a screenshot of a funding action notification. And as you can see here, it says payment type, letter of credit. And on the right, I have an example from Grant Tracker. And as you can see, it says the form of payment there, and it even references letter of credit. So there might be 5 or 6 possible drawdown systems used by all federal agencies, but the top 4 that we use is listed on this chart. As you can see, G5 is specific only to the Department of Education. NSF also has one that's very specific to them, research.gov. The biggest one you probably hear about all the time is Payment Management System, also known as PMS. It's got the lion's share of all the federal groups here. And then the second biggest one is going to be ASAP. And as you can see, USDA actually uses both. That is actually not a typo. So depending on what department or branch of USDA you got your grant from, it's going to determine which of these systems we use to draw from. Okay. So our letter of credit specialist on the research and cash accounting team is responsible for preparing and performing the LOC draws for the University of Washington. This specialist processes these drawdowns through each agency's respective online system. Draws are processed after every payroll period and at other times as needed, because usually the biggest amount of expenditures usually post after the payroll cycle has hit. So you're probably wondering if the drawdown information for your award is available and accessible. It is, and it's in Grant Tracker. As you can see in the screenshot, you can find your draw information under the financial information section in Grant Tracker. So if you look to the far right in that last column, it's labeled drawn. You will actually see a cumulative total of the amount to date. And the reason it's in blue is because these are actually links that you can click to obtain even more information about your draws. In this example, notice that both the parent and sub-budget are drawn separately. But if you're interested in the total draw, not just for one, you can go down to the lower level and you can actually click that total drawn amount and you'll get all the information. Something else I want to point out is comparing the expenditures to date here and then the drawn amount. So in this example, if you look at the sub budget, you'll actually see that we've actually drawn the full amount of expenditures posted to that budget as of that time. But on the parent, you'll actually see it's a little bit higher. So that just means that more expenditures have posted since the last time we've drawn down. And then remember, encumbrances and open balances are not drawn, only the expenditures. Because remember, letter of credit is cost reimbursable. So if you click on those totals, you're going to go to this screen in Grant Tracker. As you can see, you'll be able to view each individual draw, the date that the draw occurred, and the amount of the draw. On the top left-hand side here, you'll actually see an export to Excel button, which is super useful if you're trying to reconcile your draws. In this example, I do want to point out that the last draw shown here has not been approved by the sponsor, hence the missing debit date. So we've drawn for this amount, but it hasn't been approved and we haven't been paid for it. So as you can see here, the draw amount is also blue. So that is also a link. So if you click that, you are going to get to this screen. And this screen, as you can see, is the individual expenditures that make up that draw. And just like the previous example, you can also export this information to Excel. And something I do want to point out to kind of circle back on what Matt has said earlier about, the feds being able to see when you've like posted a lot of things after a certain time period, especially after the award ends, or if you suddenly do like a giant transfer and there's a big credit and we have to refund that money back to the sponsor, those are red flags. And the fact that they can see the individual detail, I do want to make sure that you do know that they can see all of this. So if you see it, they see it too. All right. Okay, so now I want to talk to you about closeout and drawdown cutoff dates. So as the end of your grant draws near, you will start receiving closeout notices from your sponsors. Most of the federal agencies allow grantees to draw up to 90 days after the award expiration. NSF and NIH do allow a 30-day additional grace period. So that's a total of 120 days after the award expiration. Any LOC draw requested that exceeds the draw deadline of either 90 or 120 days will be rejected. They literally close down that LOC portal. If we try to draw, it's going to come back and say that this account is closed. So something I do want to point out is that you really want to proceed with caution once you hit that 90-day mark. Again, NSF, NIH, they give you that 30-day grace period. You've got 120 days. But after 90 days, the sponsor kind of starts questioning the draws. So if you look at the screenshot here, this is taken from an NIH grant award for the final year of that award, so the 5th year. And if you notice that the final FFR is due 90 days, so not 120 days, 90 days. So if we submit a final report at the 90 days, they will shut down the PMS account because they pretty much consider us reporting in full. So the 120 really is to get the rest of your closing documents. So you'll probably get some follow-up from OSP closeout on equipment, any patent, any additional closeout information that they need, your final PPR, that kind of stuff. So again, don't be fooled by the 120-day draws. That's actually not true. And we've had a couple of instances where they've shut it down and we didn't realize it and we hadn't submitted our FFR yet. So and we've also had instances where we hadn't submitted the FFR, but they start questioning very large draws, especially as we get closer to that 120, and they have denied them. So please do not think that you really do have 120 days, because you really don't. Okay. So now I'm going to talk to you about document numbers. So in this example, I'm going to talk about NIH, but there's actually a lot of other sponsors that use document numbers, especially if they draw from PMS. So in the pursuit of strengthened fiscal oversight, NIH announced in July of 2013 the end of the PMS pooled accounts in favor of PMS subaccounts. So you want to think about pooled accounts as like just a giant bank account for the University of Washington. New awards started seeing the inclusion of document numbers, which would be used to identify and draw from these new PMS subaccounts. This would allow NIH to have visibility of draws by award and the ability to enforce the closeout deadlines. The ability to draw down funds would be restricted 90 or 100 days after each award end date. This required changes in the method that all universities use to draw funds from sponsored research. And GCA was no exception. So by September of 2016, all NIH awards and other sponsors as well, all had PMS subaccounts set up, and they had, gone away with the pooled accounts. So most NIH awards are only assigned one document number, but there are times when more than one number will be issued. This is due to restricted funds that must be reported separately, like your COVID supplements. I know a couple of you know about that. And also just supplemental funding coming from a different funding source. For example, carry forward. Some of our sponsors will keep the prior PMS account open and force us to draw on those prior document numbers in addition to the current document numbers. And that kind of creates a lot of problems. Because now you're maintaining two accounts. So for GCA to manage these multiple document numbers for drawdowns, we will unfortunately automatically create a new sub-budget for each additional document number assigned to an award. So to clarify, more than one budget can be associated with a document number. For example, if you ask for additional sub-budgets for your project, you send us TPUs, all the budgets can reference the same document number and get drawn from the same account. However, it gets tricky if you request additional sub-budgets for funds with a different federal doc number than the parent budget. So again, if you know that your funding is, got a different document number assigned to certain pots of funds, keep that in mind and notify GCA. If you need to set up sub-budgets or break that down, an existing sub-budget down to another sub-budget, because we need to take extra care when processing these types of awards. So we draw down the correct, from the correct account for either restricted funds or your main funds. So some of you may, from time to time, get a notification about a federal cash transaction report. So what exactly is that? All non-DHHS LOC awards require an additional report called Federal Cash Transaction Report, also affectionately called FCTR. These reports are completed by our letter of credit specialists each quarter. The financial status reports, the SF425s, are completed by our GCA reporting team, and these are either quarterly, annual, or final. So FCTR reports run through calendar quarters, but the federal government fiscal year actually is a little different. It starts October 1st, which is why you're looking at this and seeing kind of a different order of quarters here. And the only exception is NOAA. Those FCTRs are due semi-annually, so 6 months. All right, that concludes my presentation on letter of credit. Are there any questions? All right. Oh, hey.
Oh, wait.
one question.
Just right there. Is there going to be something comparable to the drawdown view on Workday Finance or any type of final action date reminder or alert?
I'm pretty sure, I'll defer to Cheryl to jump in a little bit about that because she's seen the system more than I have, but I'm pretty sure we're trying to mirror exactly what you see in Grant Tracker as of today. It's just that we're going to maybe get some upgraded enhancements going forward. Cheryl, can you verify?
I cannot verify because I haven't seen that part of the system yet, but I would echo what you said, Azalea, which is that is absolutely something that we are asking for. So I do hope that it will be in there. Anything with the new system, we just haven't seen a whole lot yet.
Thanks, Cheryl. Susan, are there any more questions?
Yeah, it looks like we just got another one. Can we find the quarterly closing dates on the GCA website?
Quarterly closing dates for the FCTRs or?
Yes, for the FCTRs.
Oh, no. So that's really, again, what you see in Grant Tracker is what GCA does. The FCTRs is something that our research accounting group manages, and so that's on their radar. But I think that on the original award document, not so much the supplements, I think that those quarterly report due dates are listed in there. And if you ever have questions or you want to walk through or see what's going on, let us know at GCA Help, and we'd be happy to look into that and find that information for you.
And it looks like we've got a comment and a question that are related. I couldn't find the federal document number on the NOA, and there are lots of numbers on an NIH notice of award. Is the letter of credit document number called the payment system identifier?
Oh, I was on the verge of making this a 45-minute presentation, but I also have to think about my other cohorts here. I was going to do a screenshot of that. That's a really good question. You know what? Let me do it. Can you contact me? Who asked that question?
Brenda Stuvek.
Oh, great. Okay, Brenda, I'm going to follow up with you directly, but that is something that I think I could do a part 2 LOC presentation about that. I just didn't have time. So great question, and I'll follow up with you later. All right, anything else?
Not seeing anything else.
All right, cool. Okay, so now, oops. All right, now I'm going to turn it over to Michelle, who's going to walk you through carryover.
Hey everyone, I'm Michelle. So today I'm going to go over carryover, so what to look for in your award, and a general overview of the carryover process. Next slide. So to quickly define carryover, this is when the unexpended funds at the end of the budget period are transferred to the next budget period. So some sponsors allow automatic carryover, meaning you don't have to request approval to continue using those funds in the next period, while others require prior approval for these funds to remain available to you. Next slide. So ideally, your carryover terms will be neatly outlined in your award document. So right here, we have this example where the sponsor clearly checked that automatic carryover is not allowed and requires their PI's approval. Next slide. And then, of course, not every award is as straightforward. We have another example of this multi-year award where the agreement kind of only says that you can spend according to your approved budget, but doesn't really discuss what to do with unspent funds at the end of each year and if you're going to continue to have access to those funds. So if it's really unclear like this and there's no additional communication or documentation from the sponsor, it's worth checking with them just to verify those terms. Next slide. So as GCA reviews awards, we also make note of the carryover terms, and we'll include this on the funding action on the second page. There's a section where we mark the carryover as requiring sponsor approval, or has automatic carryover, or is subject to sponsor limitations, which could be a variety of things like, you can only carry over up to a certain dollar amount, or you have automatic carryover as long as the award number doesn't change, something like that. So next slide. So let's say you have automatic carryover. So now what? So for a lot of these, we'll use the same budget number for the entire project period or award segment, unless the award requires separate invoicing or reporting. So if we use the same budget, we're just going to continue supplementing the budget, and the funds will remain available through the end date. And then if it's a case where it has separate year invoicing or reporting, we'll set up a renewal budget for future years and add the carryover funds when the current budget is close to status 4. And when we allocate those carryover funds, they'll be allocated to object code 38, And if you have F&A on the award, also to $25.99. And the funds don't need to remain in those object codes. If you want to, reallocate them to other object codes, you can just let us know through the grant tracker and we can revise those funds for you. Next slide. So if you don't have automatic carryover, then what? So for a lot of these, you're going to have to work with OSP, and the process varies depending on the sponsor, but commonly you're going to have to submit a concurrence letter along with an explanation of your total unobligated balance, like why do you have those funds left, and how much you'd like to carry over, how you plan on using those funds, and also a scientific justification for the carryover. And if the sponsor approves your request, OSP will then issue a carryover pack. And then when GCA processes the pack, that's when we'll make the carryover funds available to you on your continuation budget. Okay, and then the final slide, I just listed out some additional resources. These are all links. So we'll post the slides to our website later. So if you're interested, you can access them at that time. Any questions?
Not seeing anything in the chat.
Okay, thank you.
All right, thank you, Michelle. Okay, next, we've got tips and tricks with Susan.
Thank you. Next slide. So first, we're going to talk a little about bulk org code updates. If you need to update the org code for just one budget, we ask that you send us a grant tracker. That's nice and simple, easy to process, and it stays part of that budget record. But what if you need to update 10, 20, or 200 budgets? Maybe you have a large group of budgets that move to a different location, or you've had some sort of change that's in your org code structure and you need to do all an update on very large scale. Do you have to send a separate grant tracker for each one? Next slide. We actually beg that you do not. This image of Captain Kirk from Trouble with Tribbles. This is how you feel when you see, as in GCA, when you see 200 grant trackers in one topic suddenly appear. And I'm sure that's also what it feels like when you're the person creating dozens or hundreds of grant trackers. Next slide. So to get around this problem and to keep it simple for everyone, we've created a bulk org code update form, which you can use anytime you're requesting org code changes for more than 5 budgets at the same time. You can download and complete this form and send it to GCA Help. And that is a link on the slides. And once these are uploaded, you can access it from there. Next slide. So next I'm going to discuss sub-budget request, whether you want to use the online TransPasU or the Excel form. So you're setting up a new sub-budget or you're requesting changes on an existing one. Should you be using the grant tracker tool or the Excel form? Next slide. The grant tracker tool, which you see here, it's on the sidebar under maintenance. This can only be used if you're setting up a new sub-budget under a grant or contract parent budget. Next slide. For anything else, you're going to want to use the Excel form. This includes new sub-budgets where the parent is a gift or an endowment. If you're looking at a parent budget and there isn't the opportunity to, if the add new sub-budget option isn't available, that probably means that it is a gift or endowment budget. Or if you're adding additional funds to an existing sub-budget of any type, when you're changing a sub-budget's PI, we need the TransPasU form because that way we can see that it has the full approvals and the new PI is taking responsibility for the budget. If you're transferring funds from a sub-budget back to the parent, that will also use this form, and we have a link for downloading it. We sometimes get questions on whether there is anything in the works to automate these other types of TransPasU. And the answer, as we're getting so close to Workday launch and financial transformation, is not now. We're not making any additions to these systems that are about to become obsolete or at least transformed. Next slide. And here we just have some resources on sub-budget setup and changes and on the parent and sub-budget policy. Next slide. And last, I'm going to talk a little bit about updating campus contacts in Grant Tracker. We really urge everyone to provide current contacts for all of your budgets in the Grant Tracker system. This helps us to reach out to the right people when we need to provide or ask for important information related to your budgets. And if you can keep these contacts up to date as you have staffing changes in your department, that will make sure that the right information gets to the right people in a timely manner. Next slide. And you can access this maintenance page from Grant Tracker. In the sidebar, you see there's a Maintain Campus Contacts link. And also, if you're looking at a specific budget, in the same area on the budget information page where you would go to ask a Grant Tracker question, you have the option to go to Campus Contacts Email Maintenance. Next slide. And when you're in that area, you can update an individual budget or make a bulk update for an org code or a PI. And we have detailed instructions on that process, and these are linked to, and you can get these once these slides are uploaded to our website later today or tomorrow. Next slide.
And Susan, we do have a question for you. Back to the org code changes. The question is, can both the old org code, both the old org and the new org submit the org change request?
Yes, they can.
So anybody can make that change request. Yeah. Okay. Thank you.
All right, if there's no additional questions for Susan, I'm going to go forward. Thank you, Susan. All right, so now I'm turning it over to Jonathan to talk about department submitted invoices and best practices.
Thank you, Azalea. All right. Well, most GCA issued invoices, go back to the first one. While most GCA issued invoices are submitted to the sponsor automatically, some awards have invoicing requirements that GCA cannot meet alone. In these cases, GCA will prepare the invoice as usual, but instead of submitting the invoice directly to the sponsor, we will send it to the department via Grant Tracker. From there, the department will add whichever elements could not be met by GCA and submit the invoice to the sponsor themselves. These are some of the best practices that you can follow to ensure that your invoices are prepared and submitted properly without risking payment delays or non-payment. Next slide, please. First thing that you can do is know your requirements. And the big thing here is to read your award document. If the terms and conditions of your award ask for things that GCA cannot provide, that's a good indication that department assistance will be required. These requirements can include, but aren't limited to, receipt copies, timesheets, expenditure breakdowns by task, the PI signature, PI progress reports, or anything else that the sponsor decides that they want. The other thing that you can look at is the funding action. When your funding action is processed, GCA will add notes about what invoicing information will be required. Checking these notes can help make sure that you know what the sponsor is expecting. And finally, you can ask GCA. When in doubt, ask. We're more than happy to answer any questions that you have about how your award is set up in our systems. If we show that department assistance will be required to submit invoices, we can tell you where that requirement came from and what assistance you should be prepared to provide. Next slide, please. Next thing you can do is know how to meet your requirements. So you know that your sponsor requires receipts and timesheets, but in what format? Once you have everything, can you send it all to the sponsor via email, or do they want to upload it to their portal? Having all of this kind of things figured out before the invoices are due can ensure a smooth invoicing process and prevent you from having invoices rejected. As a note, GCA may be able to help resolve ambiguity in these kind of situations, but the sponsor is ultimately the final arbiter of what meets the requirements and what does not. As such, when you have questions, it may be helpful to reach out to the sponsor. Next slide, please. Like Susan was saying, a really helpful thing to do is to update your contact information. All invoice communication from GCA will come via Grant Tracker. As such, it's really, really important that you keep your campus contacts updated. And I've included a link for where you can update your Grant Tracker campus contacts. Next slide, please. It is always important to be regularly checking your Grant Tracker messages. Not every Grant Tracker message will require action from the department, but all messages will at least contain information that the department needs to be aware of. In situations where department action is required, it is important that the appropriate steps are taken in a timely fashion. Examples of this can include automatic invoice notifications. When the department will be submitting the invoice to the sponsor, GCA will send out a Grant Tracker as soon as the invoice is available. At that point, it is the department's responsibility to review the invoice for accuracy, gather any required backup documentation, and submit the invoice to the sponsor, and notify GCA once this has been completed, preferably within 5 business days. Without a notification from the department stating otherwise, GCA will assume that the invoice was sent out within the 5 business day window as requested, and will send out delinquency notices on that schedule. This can be understandably upsetting to the sponsor if the invoice was not, in fact, sent out in that window. As such, it is very important that departments confirm to GCA the actual invoice submission date and let GCA know anytime that there is a delay in getting an invoice submitted. Another situation where department action will be required is invoices with special handling instructions. In situations where GCA will be submitting invoices that require backup documentation or other details like task breakdown or sponsor expense categories from the department, GCA will send out a Grant Tracker message requesting that details be provided within 3 business days. Since this is a sponsor requirement, until the department provides the requested details, GCA will be unable to submit the related invoices. In the event that delays are severe enough to prevent the submission of the invoice by the due date, can put UW into non-compliance with potential repercussions for grant payments and the awarding of future grants. That's obviously an outcome we would all like to avoid. So it is important that departments provide requested details within the 3 business day window and notify GCA if there are any issues. Next slide. When in doubt, ask GCA. We are happy to answer any questions about this process and direct you to appropriate resources. We're also happy to investigate if you have concerns about how your awards invoicing was set up or think it was done wrong. So feel free to contact us. You can contact us via Grant Tracker, got a link there. You can send us an email to gcahelp@uw.edu, or you can call us on the phone from 9 a.m. to 4 p.m. Monday through Friday at the phone number listed there. Next slide. Any questions?
There is nothing in the chat.
Okay, well, thank you all for your time.
Thank you, Jonathan. Great job. All right, so now we're going to go on to encumbrances and open balances with Patrick.
All right. Excuse me. All righty. I see we've got about 10 minutes left, so I will try to wrap this up. Go ahead and hit the next slide. So encumbrances and open balances. We'll start with what they are. An encumbrance is an outstanding commitment on a budget for a transaction that is processed through the financial accounting system, FAS for short, commonly applied to salaries, indirect costs, or restricted funds. An open balance, on the other hand, is an outstanding commitment on a budget for orders or contracts placed through the Ariba procurement system. Next slide. So what are some key differences? Encumbrances are housed in FAS and managed by either GCA or the Integrated Service Center, ISC. They manage the salaries and benefits encumbrances, and GCA typically manages the IDC or restricted funds encumbrances. Open balances, on the other hand, are housed in Ariba and cannot be cleared by GCA. Both should be cleared to close a budget to status 4, but a budget can be closed if an open balance remains. However, it cannot be closed if an encumbrance remains. Next slide. So the next question then would be how to close them. Encumbrances will be cleared before the budget closes. To close encumbrances in salaries or benefits, please reach out to ISC. Other encumbrances will be cleared by GCA while the budget is in status 3. Open balances can be closed in Ariba when an order is either completed or canceled. Next slide. Where can they be viewed? So they can always be viewed in both Grant Tracker and My Financial Desktop. Grant Tracker, they are located to the right of the expenditures and will show the balance after applied. You can deselect include encumbrances or include open balances to see your award's true remaining balance without them applied. And in My Financial Desktop, they are also reported to the right of the reporting period transactions and can also be deselected to show your budget's balance based on current expenditures only. You can also pull a report of encumbrances and open balances on a budget. Are there any questions?
Not seeing anything in the chat. Or wait, we just got something from Sonia. I noticed that sometimes the workday salary changes are slow to reflect in encumbrances. Do you know how often they are updated?
So the workday salary ones would be done through ISC. So I am not sure how often those are updated.
I think they can only be updated after each pay period. You have to remember that Workday is still a separate system from MyFD, and so it's not integrated. So they have to go through some additional workarounds to get that information into MyFD and then updated. Because I know that we've had several questions for the ISC regarding that as well. So I think that may be what the disconnect is that we're still on separate systems. And of course, as we move to, full Workday, hopefully that will be eliminated.
Okay, we have another question. I noticed the IDC is encumbered even when there's no transaction. No transaction is encumbered. Why is that?
So IDC is, I believe, automatically encumbered based on the amount applied in FAS to your indirect costs. It is also automatically reduced as expended. So whether or not there's no transaction, this is to help you better balance the budget and really see the direct costs that you have to be able to apply.
We have another question. Is it important to clear open balances? Can they be cleared if a budget is in status 4?
So we do prefer that open balances definitely be closed or be cleared. And oftentimes when closing has a budget, they will reach out to you to clear the open balance. However, unlike encumbrances, we can put the budget in status 4 without them being closed or cleared. If they can be cleared after it's in status 4, I am not certain.
Yeah, I'll pop in on this one too. I feel like we had a project a number of years ago where we worked with procurement to clear a bunch of them out. And I don't remember that we had to, I think we had a special process. So I think the preference is if you can clear them before they go to status 4. But if you do run into something, you know what, let us know. We'll open it so that PCS can clear it. Because I think it's kind of for the best if we can do that.
Yeah.
And this is Azalea. I will also chime in. So the worry is, again, like Patrick said, an encumbrance is a placeholder for a potential charge to hit the budget. And so when we get to final invoice, especially final report, we just get really worried when we see a large amount in the open balances. Is like, oh my gosh, is there a pending charge that the department isn't telling us? Or are you planning to move that, purchase order ahead to the renewal budget to kind of clear that out off the old budget, but put it on the new one because you are planning to make more expenditures? So that really is our worry.
And we've also got a comment, requirements to clear REBA open balances seem excessive, and this could be why so many old ones remain. I guess what's required to
Clear out the
make those.
request in Ariba.
Mhm.
Yeah.
Yeah, I mean, we can't, Patrick and I can't really comment on that because, we don't do the REBA side, but, well, we totally understand because, having to do extra hurdles, it's always a pain when you're, trying to close out a project and you're starting the new one. But I think that is tied to certain requirements that are necessary for procurement to just make sure that purchase orders are closed out correctly. So I think that's why it's a little tedious.
Mhm. And we've got a response from Vince in response to Sonia's question regarding salary encumbrances. Salary encumbrance information is sent to FAS twice monthly from Workday, recalculated and posted on the day after the actual expenses post, and then gives a link with a source.
Thank you, Vince, for that one.
And then we have, at one point we were told open balances might remain on the budget number when the budget number is reissued years later.
All right, I can speak to that. That is 100% true. That did happen, and we took us a while to figure it out. But going forward, with Ariba being retired, that won't be hopefully an issue because we're going to have a whole new system.
And have a comment. There's a new form to close out requisitions that can be found here, and Sadina provides the link. Which, thank you.
All right.
And unless there are any other questions, which don't see anything else, but if you have questions for us later, we are available by phone, by grant tracker, or by email.
Susan, you stole my thunder. To echo what Susan said, our future forum will be sometime in November. As always, we will send out an MRAM notification to let you know the exact time and date, as well as provide the Zoom link. If you would like to see this presentation again in its entirety, or you would like to share it with your staff, we will be posting the slides and the video hopefully in the next 48 hours. And the link is here. Also, I know that you don't have the slide deck, but you can go directly to our GCA website and then look for the training and outreach section and find the link there. And then I'll be sending out a survey. We would really appreciate it if you could please fill that out to let us know how we did today, and also what topics you would like us to cover next time. And as Susan said, you can always contact us at Grant Tracker, email, or the GCA helpline. Again, we're open from 9 to noon. We close for lunch, and then we're open again 1 to 4. Thank you again for taking the time to join us. We appreciate it, and have a wonderful day.